CEAT announced that they have entered into a definitive agreement with French tyre maker Michelin to acquire its Camso brand of highway tyres and tracking business for $225 million. I spoke with the CFO, Kumar Subbiah, about what this acquisition is going to mean for CEAT. Listen in.
From our own strategies and priorities point of view, there are two important things. From capital allocation standpoint, our specialty business, which is off-highway tires, is at the top. And second is that our focus is on the international market. So as far as this particular transaction is concerned, there is a tick to both. It fits in very well, complements very well to our specialty business. The transaction is about purchase of compact construction tire, which falls on off-highway tires and also tracks. This is a premium brand. And the first 3 years, we would have a license to use this brand for this specific category. After a 3-year period, Camso brand would be available to us. We would be owning that brand, and we would have all the rights to use that brand wherever we want. So it's a profitable category, and it falls into the premium segment in addition to the fact that it is part of specialty and international business.
Okay. And the $225 million for the acquisition, how has that been financed?
I think we expect another 6 months for the transaction to get completed. There are regulatory approvals. And we also have some schedule that we have agreed with Michelin for payments. So overall, we also, that we incur about 1,000 crores of capex every year. Considering, funding is fungible, both for capital expenditure and also acquisitions like this. We do not expect more than 70% of this amount at an overall level, including even the capex that would continue to incur in the future, to be our debt, and balance 30% would get funded through internal accruals.
Okay. Just give us a sense, Mr. Subbiah, that what is going to be the impact on your off-highway tire segment revenues? That's expected to double, I believe, if you can confirm that. And as a result, what is the impact you see on margins?
So in the year 2023, approximately the revenue of this business was about 200 million. And as far as current year is concerned, we'll get to know by end of the year. Maybe it could be a little lower than 2023. So it's a significant portion. And as far as our off-highway tire revenue is concerned, at similar level. So as you rightly said, our revenue from OHT would double through this acquisition. It's a profitable product in the segments that they operate in the compact construction. Camso brand is considered to be a premium. It's a tier 1 brand. And we expect this to be margin accretive as far as CEAT is concerned.
That's true, sir. But to what extent is what I was trying to understand? I believe Michelin says that 20% is the margins from this segment versus, I think, 13 to 14%, which you're currently seeing. Is that the kind of margins you're looking at?
Okay, see, margin is a function of, the scale of operations too. Yeah. So therefore, at this point in time, there is an opportunity for us to operate that particular plant at a higher scale. We expect it to be higher than our current company range that you just now explained. But we will be able to comment once, we take possession of the business. What we would like to say now is it's going to be margin accretive, and exact level of margin as we start operating it, I'm sure we'll be able to provide more visibility.
Okay. You also, of course, as part of this acquisition, get 2 plants in Sri Lanka. What is the kind of utilization there right now?
Okay. Current utilization is in the range of about 50 to 60%. So therefore, there's an opportunity for us to operate at a higher level. And so there is enough headroom for us to grow this category of business for next few years, considering that adequate capacity is available in Sri Lanka.
Okay, so how far do you see the utilization going? Or is that also something that you'll know once you have the assets in hand?
No, so it's possible for us to grow, okay, and we need to bring a lot of focus. It's very well accepted among OEMs. More than about 40 OEMs use these tires and tracks. We are excited about in terms of growing this business. So internally, we would like the plant to get fully utilized over a period of time. So there is an opportunity there.
Okay, just let's do a quick sort of mood check for the business. Since I have you here, Mr. Subbiah, the first half has been tough for the segment, not just for CEAT, but I would say for the industry. High input prices, slow Europe demand, etc. Are you seeing Q3 picking up?
Look, if you really look at our first half, we are happy with the way we have grown top line. And we have grown by about 8.5% in the first 6 months versus the same period of last year. Our internal plan is to deliver double-digit growth, which means that we have to grow higher in the second half of the current financial year. With respect to operating margins, raw material prices went up substantially in the first half of the year. Rubber prices reached 14-15-year high in India. So therefore, there is some impact. We are trying to, manage the margins through appropriate pricing and mix. So generally, a pricing has a lag. So therefore, in the Q3, we have taken some price increase in certain specific categories. So we look forward to, commodity prices stabilizing and margins progressively coming back to the normal range.
Is another round of price increases in the offing?
Some price increase happened in passenger car, truck and bus, radial tires, truck and bus bias tires in the month of October. And then one more increase happened towards November. So as you would know, in tire industry, in general, price increases happen in small proportions. So those are already happening. With respect to OEM, generally there is a 3 months lag. So we took some price increase based on the raw material cost movements in Q2. And any further movement in Q3 will also get adjusted in Q4. So that's the way it's progressing.
CEAT for you. The stock is doing well, but let's see how they digest that acquisition. For now, about 8% higher, 3340 and counting.